Hello everyone, this is Carlos Lopez de Almeida, founder of the Plus X Fund, coming at you during this endless, brutal, violent massacre of a market. Today is Saturday, January the 8th, 2022. And today we're going to talk about where the bottom of this abyss of misery is most likely going to be. So please click like and subscribe to our channel. And now let's pull up the charts. Let me move my face over here. So this is the graphic depiction of misery and fear and blood. We can see our trend line of doom. Well, there's three lines of doom here. I'm going to go over why do I have three lines of doom and what do these signify? Well, basically, to cut the story short, to give you this summary, our bottom is either going to be around here, where we bottomed out at $29,000 before in the summer, or our bottom is going to be around here, $40,000. So we're either going to be around 30 or around 40. If we bottom out around 30, obviously around 40, that's way better for everybody. The downtrend ends soon. All historical precedents will be respected. Market structure stays intact. Bullish scenario. Bearish scenario is everything is violated, all historical precedents out the window, and we hit this level down here. So, will we go below this level? I sincerely doubt it. I think $30,000 is the floor. Big institutions like Michael Saylor with MicroStrategy, his average buy price is about $30,000. This is a massive institutional floor. Up here, we're in a beautiful market manipulation area. So there is a lot of manipulation going on right now. But we will find a bottom, hopefully, in this area. So let's look at the trend line of doom first, which is being broken right now on the daily chart. We have a daily close below last night, and in a few hours we will probably confirm a daily candle close below. So we will be officially holding this trend line as resistance instead of support. I carefully drew it here on this wick low. Not quite this one, but it touches the December 4th flash crash low and where we bounced recently off of it. So I'm holding the recent wick, December 4th, and this a very important level back here. So it's a very valid, well-defined trend line, and we're below it. So that's already being broken right now. So what's next are these guys here, the bull market support band line of doom and the Bitcoin hash ribbon line of doom. Now, why are these important? Well, Benjamin Cowen is a big proponent of the bull market support band, and you can see that is over here. It's the 20-week SMA and the 21-week EMA. They both form this band. And every time in Bitcoin's history where it tests the bottom of this band, I even put the line down to this wick low over here just to give it more play. But any time in history that Bitcoin has touched this, case in point, in 2017 when Bitcoin was going from $1,000 to $20,000, it did touch this line a few times, and when it touched $3,000, it never again, until a year later, at the depths of the bear market, it did come close to this price, but never touched it. So 2017 looked something like this, way up to 20,000, and then it came down, and then there was a cliff, and even at the bottom of the cliff, it never retested. So, and even before in history, you can see that. Anytime this level gets tested during a bull market, the price never goes below this. So, we're already very close to violating a major historical precedent. But if it happens, I think it has to happen on the weekly chart. And we have to have a weekly close below, and then a second weekly confirmation that it stays below. And then that will be violated. But I'm hoping that doesn't happen. Now, to coincide with that, we have the Bitcoin hash ribbons. Kudos to Eric Krown, who promoted a lot about this. You can see the latest buy signal here. We had this buy signal August 7th, and that's the thick red line. And I put that at 37,777. Chinese lucky number style. The exact dollar value doesn't matter. It's just around here. Same deal. Bitcoin hash ribbon. Flashes a buy signal. The price never again in history will close below this and form price action or a downtrend below this. Never again. You can see it in all of history. All of history. You can go to the 12-year history of Bitcoin and go to the weekly chart, and you can see right here, $4 Bitcoin never went below. Here, $6 Bitcoin almost tested it a little later, but never went below. Then you had an $18 Bitcoin here, and that was a parabolic uptrend here, so obviously. And then in the next bear market, you had $200 and change Bitcoin. And it did test. After a couple months, it did fall back to $200. And we got a couple of those buy signals, but there was never a close and price action below any of these buy signals. And so this was a reliable indicator for a market bottom. And then it was years. Look at this, 4 years. We had to hit the 2017 blow off top. And here's that $3,000 level. Here, boom, $3,000 level. Never came to that again until this severe bear market crash, 50% crash here. And the bull market support band was respected, and we got a hash ribbon buy signal. And that also was never violated. So later there was another one here, the only one in history that was violated by the Corona dump. Hyper murder, once in a generation, once in 100 years, global pandemic flu that shut down all businesses in the economy. That was the only thing able to violate one of these Bitcoin hash ribbon buy signals. So this is pretty major stuff here. And these future ones were after the Corona dump, everything just went up. So now we have one after a rise to $64,000, a big, huge China dump, a bottom, and then after the bottom, we got this one here at $37,000. So let's go back to our chart where I have that. That was over here. And this one is now being retested at this red line. So this is the red line to watch. I believe that this is unlikely to be violated. If it is violated, it may be on a wick, and then it'll bounce, and within 1 or 2 weekly candles, it'll close above, and it will not be violated. And if it bounces, we should close above this dotted line to respect both of these historical data points. And then that would be fabulous market structure and give us a lot of base for predicting what the bear market will do in the next bear market. Now, if all of that is thrown out the window and the crypto gods say, screw you, everything's changing, you can't count on anything, well, then we'll have weekly close and confirmation close below this and a continued downtrend with, not that much pumping. And then as a fund, we'll actually be winning Bitcoin at that point because we're now totally in dollars. We're in super protective defensive mode. And if we actually fell down here, I mean, we would be falling, we would be up 30%, 27% on Bitcoin if we fell down to these levels. Or more, because we might win money on various pumps on the way down to there. Very carefully though, we're being very careful at this point. And we're not going to go heavy on any positions until we see a clear bottoming pattern. We need to see a clear bottoming pattern. So we are looking for this level to hold, but how will we know it does hold? How will we know what the bottoming pattern is? A clear one here from July, end of July, a V shape. If we have a V shape that has a size of 14% or so, and it lasts about 12 days, that's a bottoming pattern. Now inside of that, there was a V shape here. This inner V was 10%, about 10%, and lasted 3 days. So we're seeing this kind of like 10% V inside of a 15% V, and the necklines are broken to the upside. That's a clear bottoming pattern. You can have false signals like this, but if you see a neckline here, this is a neckline, it never gets broken. It gets broken briefly, and then it's a swing failure pattern where people try to long this and then they get slaughtered. But that's why we DCA. DCA is the best strategy. So if you get a small portion here that gets slaughtered, it doesn't matter because you have more portions to allocate, and then you get the average price, and then eventually you win. So definitely DCA. But that's one definite bottoming pattern. Another one, if we look at coronavirus, I mean, that was a flash dump, clearly. But it's similar. It's a V. It's a type of tilted V. And once it breaks the neckline, this one broke slowly. So it's kind of breaking a level here. Breaking out, testing it, and continuing up. And that's kind of a slower recovery. And once we were breaking 10,000, it's game over. You could see that the market had strength. But this one's hard to gauge. There's a bottoming pattern with a retest. They're hard to find in history. They are hard to find. There was a smaller one here in September correction. If we look at the 4-hour chart to the September correction, this type of V is really a W, and we did break out. This was only 8%, and there was a type of neckline up here, and we broke up. And then of course there was the wider base here, and that broke up. So that's what we're looking for. We're looking for something like that. We would probably find some further dump, maybe some volatility. And then the way that the market recovers is unknown. No one can predict it. But clearly there'll be one neckline around $46,000. If we have a big bounce, let me delete this. If we have a big capitulation, oops, I don't know how I did that. Again, that's like an interesting trick. I don't even know how I'm doing it. But if we have a sharper bounce, this here would be 10% within what I drew is 7 days. It would ideally be faster, 4 days. And then if we saw that breaking the smaller neckline, which would be around 42,000 or something, that would be time to be DCAing, small position. This would be much bigger positions up here, but we're looking for this type of pattern to start getting confidence back with a close above, confirmed close above. Altcoins as well. You can see Bitcoin dominance is going up right now. Big move up here, 4% up. If this continues, if we break this level here, 41.5% to 42%, then likely Bitcoin is going to have dominance going back up to 45, 46% to the top of this triangle. And altcoins will bleed heavily. And you can see that Ethereum is now crashing. Ethereum is on the way, well, it might hold support at its 200 moving average, but if altcoins take a massive beating, let me see what scale I'm on. I'm on the log scale, so this was a linear line. Let's make this a logarithmic line. We could easily get down to $2,600. Currently at 3,000 now for Ethereum. We're breaking way below the December 4th flash crash at 3,300. We're now going to the 2,800 support down here. Altcoins this is just breaking today. Heavy losses in altcoins. Cardano down to 113, breaking below this massive line. Look at this, breaking through this. Who is shorting Cardano? Somebody was asking. Shorting Cardano. Who's shorting? Who's got the balls to short the bottom of a 60% correction? The manipulators. Exactly the people who are manipulating this. They have a bunch of Cardano they probably bought for a penny, and they're dumping it on the market while having short positions open. And there's no regulation. No one's going to jail for doing that. So they're doing that, and that brings the price down even lower. And then they'll buy back. They'll find their good support area to buy back and trigger other traders to buy back as well. And they're making their profits. So we have 92 cents here. We have 99 cents here. So, but I would go by this level, $1. $1 here is massive, obvious number. $1 Cardano. That's where we're falling to at this rate. So another 11% down. And Cardano's at $1. So we're just in dollars right now. We're sitting nice and pretty in dollars. Just be patient, guys. Let's wait this out. Let's wait for a massive bounce from a bottom area and then get back in the market. Let's just be patient. Trade safe. Be patient. Take care, everybody. Bye-bye.